Hi traders, so let's get on to the charts, DXY, as we usually do, dollar index. It's hanging above that upper trend line of its ascending channel, and the 21-day exponential moving average is providing some dynamic support as those price dips are made. RSI bounce off that 55 line there, which is held in the past on support. Moving averages are all pointing in the right direction. The momentum is up in the favor of the dollar bulls, and things are looking good on that front. In terms of targets, I'd be on the upside, I'd be aiming towards this previous high here around just shy of 97, and on the downside, I'd be looking towards this 95.5 support line we saw here, which is just below that 21-day exponential moving average. Really is dependent on the Omicron variant virus evolution path, as well as inflation on Friday will be the big ticket item for the US dollar. Moving on to Euro US dollar, we've seen, as has been previously the case, the 21-day exponential moving average has capped these rallies here in this cross quite nicely, providing sort of a shorting opportunity for those that have a bearish view on the FX pair. The RSI sort of rallied up to this 45 level here, didn't get up to the 52 as it was up here, touching up against its upper trend line of the descending channel, and it started to roll over now. Targets wise, 112 on the downside, and on the upside, if we see a further rally, I think there's a little bit of support here around the 113, 113.7 area here. We can see the highs of that candle and the tops of those bars there, the close and the high of that candle there. Moving on to GBP US dollar, and as we have been doing recently, we've been discussing a new technical analysis tool. So today, stepping up to the plate is the moving average convergence divergence. So the MACD is a widely used momentum indicator. Momentum indicators obviously signal the speed and strength of a price move. To arrive at the MACD line, the longer exponential moving average, which is it's not shown in the chart here, but the longer moving exponential 26 days subtracted from the shorter exponential moving average 12-day. This produces the blue MACD line. Furthermore, a 9-day exponential moving average of that difference, the MACD line, is plotted as a signal line or trigger line and can aid with your entry and exit. That's the orange line in this chart here. The third segment of this indicator is a histogram, which represents the difference between the MACD line and the orange trigger line. You may be thinking, why 12, 26, and 9 specifically as the settings up here? There's no specific reason for these. That is just the standard settings that were used by the inventor of the indicator. It can be changed to suit your specific needs, back tested and trialed. These settings are the most common, which means many other traders will use them. So I recommend using the 12, 26, and 9 settings. But as I say, you can change things up. The term convergence and divergence has a simple meaning. When the moving averages 12 and 26 move closer towards each other, this is convergence. When the moving averages move further apart from each other, this is divergence. The MACD line fluctuates above and below the zero line, which is also known as the center line. There's the zero line there. I haven't actually drawn in a line, but you can basically see it there. Okay, so basically, why do we use the MACD? What's its importance? So we can use a crossing over the MACD line as a trigger line crossover. A bullish crossover would occur when the MACD line crosses above the trigger line, and a bearish crossover would occur when the MACD line crosses down below the trigger line. Basically, one thing to note is to be careful of crossovers at very large extreme readings. They're not too accurate. The other thing to note is what you can do is you can also use a center line crossover to identify possible price direction moves and provide slightly more confirmation for the trade. So as we can see here with GBPUSD, we had a crossing over of the MACD line of the trigger line, and it also crossed above the center line. And then on the bearish crossover, we had the crossover, the MACD line crossing below the signal line there, and a cross down through the center line. And went quite negative, the divergence there, which was a good sign. And we had confirmation resistance from the 200-day simple moving average, as well as the upper trend line of the descending channel. In terms of cable moves, we've seen a bit of a better risk sentiment, so it had a bit of a bounce here at the lows at about 132 here, 131.9. Targets wise on the upside, 134 on that 21-day exponential moving average would be my first port of call, and then on the downside again into that 132, 131.9 support. Then moving on to Euro GBP, again, we've got the MACD out. I've explained it now on the previous chart, GBP on cable, so I'm not going to go through all that again. I'm just going to see what I'm seeing just going to state what I'm seeing on the charts. So again, bearish crossover confirmed by the inter-resistance 200-day simple moving average, cross through the center line as well as the signal line, and then we had that bullish crossover there. Also, if you wanted to go long as it hit, if you wanted to play the channel support and resistance play, and then again we had another bearish crossover. Drawn a little trend line there to show that there was a bit of negative divergence. The highs of the MACD made higher highs while the price made lower highs, and we saw a drifting off in price there, decline. Targets wise, basically 200-day simple moving average on upside around 0.855, and then on the downside, I would say these moving averages here will be key, as well as the 0.845 level. Moving on to the US dollar JPY, again, we can see a bit of a rally here as we saw a sell-off in the US 10-year yields yesterday. They were depressed going into Friday because risk sentiment was a bit softer. But now that risk sentiment's improved a bit over the weekend, we know there's a tight correlation between those two asset classes, and we're seeing US dollar JPY find some bids with the yen weakening, with some safe haven flows coming out there. And that 38.2 Fibonacci level has proved quite important in terms of support. Targets wise on the upside, I'd look towards the middle of this range around 114. Beyond there, I'd look towards the top of the range, 114.5. On the downside, if we were to see risk sentiment turn again, I'd look towards this little support here where we saw the candles come in at about 112.5. Again, notice a lot of these key areas are 0.5 numbers, round numbers. It's just how market psychology works, really. AUDUSD, we saw the bearish cross play out quite nicely there on the MACD, as well as RSI being in overbought territory, and the 200-day simple moving average. We're seeing a bit of a bounce. We know the Aussie's a high sensitive currency to risk, basically, and we're seeing that expressed now in terms of that. And it's having a nice little rally up there. And we obviously had the RBA meeting last night. Targets wise, I'd be looking towards 0.71 where it is roughly now. And further than that, I'd be looking towards the 21-day exponential moving average around 0.718. On the downside, again, that 0.7 level is key. So we'll be monitoring that. I think risk sentiment is going to be a big drive of the Aussie for now. Gold, what we have here is just basically very sideways movement, directionless, waiting for Friday's CPI release to try and maybe catalyze a price move in either direction. We've got a bunching up of the moving averages here, the 21-day exponential moving average, the 50-day light blue, and the 200-day simple moving average as well. Targets wise, 1.8 would be key, and on the downside, 1.750 if it breaches that 1.775 support level would be important. The RSI is kind of in no man's land at the moment, so can't really glean too much information from that. And then lastly, finishing off with oil, which has been rocketing higher. If we zoom in here, it's above its 200-day simple moving average now, and the 73.5 support. Targets wise, the RSI has come out of oversold too. Targets wise, I'd be looking towards the $75 area, a bit of resistance there, and the 21-day exponential moving average just above it. On the downside, we should see some support around the 200-day simple moving average, which is roughly around $73 a barrel at the moment. And yeah, that's it for today. Stay sharp out there. There's a lot of volatility. We've got some big risk events. The following week, we've obviously got all those central bank meetings. So keep sharp, manage your risks carefully, And all the best, traders. See you next week, Tuesday. Hope you enjoyed today's episode.